Fresh inflation data will be the focus this week. Wednesday's June CPI report is expected to show the index rising at its slowest annual pace since March 2021, though it's unlikely to move the needle on what's seen as a surefire Fed rate hike this month. As usual, sticky core inflation will grab most of the attention. The release will be even more closely watched after a cooler than expected payrolls report last Friday. Earnings season returns, and the first reports from the banks will provide another window into the economy and their willingness to lend. JP Morgan, Wells Fargo, Citi, BlackRock, they all report on Friday. Analysts at JP Morgan actually prefer European lenders over their U.S. counterparts going into those reports. Overall, Goldman Sachs strategists expect U.S. companies to be able to meet what they're calling a low bar for numbers. The signs have not been great going into the reports. FedEx, ExxonMobil, Nike, all casting doubt on the health of the U.S. economy in recent weeks. And U.S. Treasury Secretary Janet Yellen tones down talk of decoupling as she wraps up a trip to Beijing. Meeting with China's newly appointed economic team, Yellen reassured leaders the U.S. is not focused on gaining economic advantage, but made clear that one meeting wasn't going to solve the challenges. Much of the trip was framed as a fact-finding mission, notably on the health of the world's second biggest economy. Fresh data this morning showing deflation is now a very real concern for policymakers. Just making sure we know it's deflation and not the opposite, which is what we're coping with here.